Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news the next risk to global supply chains may come from drought in China. But first up today, there was another dairy auction this morning and prices were lower again for the 5th consecutive time and the 10th time in the past 11 events. That means from its recent peak in early March, overall prices are now down by more than a quarter, a bear market for dairy products. They were down 2.9% this time from the prior event, but worse, down more than 4% in New Zealand dollar terms. Elsewhere, global data on offer was less than positive. Perhaps bucking that trend, however, was the recovery in the weekly US retail pulse monitoring by the Red Book survey, with good same-store year-on-year growth above inflation and putting it behind it the prior week's dip. But American housing starts sagged badly, down almost 10% in July from June to be 8.1% lower than year-ago levels. This was much weaker than expected. But picking up some of the pace, and perhaps more than expected, was American industrial production in July. June's data was revised up too. This is now 3.9% above year-ago levels, that's on a real basis, and puts behind it 2 weakish months. In Canada reported its July CPI data today at 7.6%, which was as expected but lower than the June 8.1% rise. There's another inflation data point that suggests the peak has passed for inflation. But this is not expected to slow their central bank's push to raise their policy rate. In China, normally at this time of year, we note excessive flooding along big river basins like the Yangtze. But this year, it is the opposite, with very low flows and very high temperatures. This does not bode well for their farming, nor for their industry relying on hydroelectric power from their river systems. There is now talk of factories closing due to electricity shortages. Brands like Apple are having supply issues. In Australia, an unsurprising RBA set of minutes from the last meeting has most observers convinced they'll raise their policy rate another 50 basis points again in early September to 2.35%. Some sections of these minutes reflected concerns on downside risks, but the overall tone was hawkish, especially relating to their strong labour markets. The US Treasury 10-year yield starts today at 2.82% and up 3 basis points from this time yesterday. And the price of gold will open today at $1,776 an ounce, which is down $2 from this time yesterday. And oil prices start today down another $2.50, just on $86 a barrel in the US, while international Brent price is now just over $92 a barrel. These prices are now near 6-month lows. And the Kiwi dollar will open today at 63.4 US cents, which is a quarter cent lower than this time yesterday. Against the Australian dollar, we're a bit lower at 90.3 Australian cents, and against the euro, we've also slipped to 62.3 euro cents. That all means our trade weight index starts today at 71.9 and down 20 basis points. Join us at 2 o'clock this afternoon for our coverage of the RBNZ rate review. Get more news affecting the economy in New Zealand from interest.co.nz.